it's good timing. I think from the memory chip perspective, there's clearly a need. There's clearly room in the market for new players to come in, and investors are looking for opportunities to get in with something new that missed out on other opportunities. I don't know that it's marking a top. I think I'm more concerned about a top as it relates to AI as we see more IPOs come out. I know we have Anthropic pending, potentially going public at some point this year. And I think we'll start to feel more like a top, and AI related and memory chip very much falls into this category as we see more and more IPOs come to market and the frothiness that comes with smaller players taking advantage of the marketplace. SpaceX is a big one. Anthropic's a big one. This is another big one. But I think the top happens when you start to see smaller players try to take advantage of the capital markets that maybe don't have the market opportunity that something like this does.
Shana, believe it or not, next week, I guess we start another earnings season here in size. We'll get JP Morgan and some of the other banks here. I mean, what does the market need to see, do you think, from this upcoming batch of earnings here? Because the first quarter earnings were so strong, just extraordinary.
I think we need to continue to see the strength. We've had very strong economic growth here in the U.S. The earnings have been very good. Inflation is trending higher, and in a way, another strong earnings episode of the earnings for the second quarter could result in potentially the market being a little tentative, because that could mean a Fed rate hike in the later half of the year. And so it'll be interesting to see, but we definitely need to see strong earnings again. But the silver lining, if you will, is if it's not quite as strong as the first quarter, you will have the likelihood of a Fed hike more in the balance than it would be if it's another very strong earnings outlook and inflation seems high. So I think investors are really paying attention to that, with the lack of forward guidance by the Fed under the new chairman, is going to be looking at how strong is the economy and how is that going to lead to the likelihood of a Fed hike instead of the cuts that we've been talking about all year.
We have a FOMC minutes due out later this week on Wednesday, and it's kind of marking the halfway point between the last Fed meeting and the next Fed meeting. Given that Kevin Warsh has made really clear that he does not want to be as communicative as past Fed chairs, do you expect to learn anything from the release of the Fed minutes?
I don't, actually. He has gone out of his way to make sure that at least he isn't showing his cards. He's not participating in the dot plots. He's not really giving us a lot of he stands on these things. And I believe that the Fed minutes will be a different tone than under the previous chairman. So I just think that the market is now going to be forced to make decisions based on actual data that comes out, which is kind of what the Fed wants, right? Like the Fed would rather have market participant and reaction as a data point as opposed to them following what the Fed's doing and therefore not being an effective data point for the Fed to kind of decide what's going on in the economy. So I actually think these minutes are going to have a very different tone than they have previously.